In the meantime, the government has another major issue to tackle: rebounding oil prices. Amid price pressures elsewhere, the government is reviewing whether or not to extend the current fuel tax cut. Our economic correspondent Shin Ha-young reports.
With oil prices hitting record highs around the world last year, South Korea has been offering a temporary concession on fuel to ease the burden on drivers. Currently, the tax cut on gasoline is set at 25%, while the rate for diesel is 37%. With the rate set to expire at the end of this month, the government will decide this week whether or not to extend the discounts.
We will make more proactive efforts to review the opinion of the National Assembly from the perspective of the burden on people's lives.
The finance minister's remarks came in response to a request from South Korea's ruling party to the government regarding continuing with the fuel tax cut. With a recent announcement by OPEC Plus about production cuts, oil prices are seemingly on the rebound, with prices in general likely to be affected.
Considering trends in general prices and oil prices as well as the burden on the people, we urge the government to actively consider extending fuel tax cut measures for the time being.
However, the government cannot extend the fuel tax cut indefinitely due to rising concerns about a deficit in overall tax revenue. South Korea recorded its greatest ever on-year tax revenue decline earlier this year. According to the Ministry of Economy and Finance, the country's tax revenue for the first 2 months of 2023 came to around 54 trillion Korean won, or $41 billion, roughly $12 billion less than in the same period last year. With tax revenue and rising oil prices in mind, the government may look at a compromise option, meaning further fuel tax cuts at a lower discount rate. Shin Ha-young, 아리랑뉴스.